President Donald Trump announces the new 50-year mortgage, allowing people that are overextended to become even more overextended, potentially creating a massive victory for banks. Now, on top of that, a few hours ago, prior to this video, he's also announced a $2,000 stimulus, potentially, because he's already done this before. Don't forget that, guys. But potentially a $2,000 stimulus going back to mom and pop. Now, remember, the government is still shut down, the longest shutdown in history. People are still waiting on their SNAP benefits and figuring out what's going to happen with that, as well as the end of December. Don't forget, the Affordable Care Act is set to run out, causing people's medical insurance to skyrocket. So we have a bunch of things to talk about today, but where I'm going to start is by looking at the math so I can show you guys just how bad a 50-year mortgage actually is. We're going to do that by looking at a 30-year loan and comparing that to a 50-year loan, taking a $450,000 loan amount for 30 years at a 6% interest rate. Now, a few things I want you guys to remember. The first thing is the mortgage payment sitting at $2,697. But I've also highlighted in red, and here's what's going to jump up. The total amount of interest paid over 30 years is going to be $521,000. The first year on a 30-year mortgage, you pay $5,500 towards principal. So remember that, because I'm going to show you in what year that happens on a 50-year mortgage. I also want you guys to remember it's not until year 19 on a 30-year mortgage that you finally start paying more principal than you do in interest. When we compare all of that to a 50-year mortgage, which you guys see right now at the same loan amount and the same interest rate, your mortgage payment drops $329 per month to $2,368. But I highlighted right here, you guys, the interest, because the interest goes up over $450,000. So essentially, going from a 30-year to a 50-year causes you to pay the entire loan amount all over again. So let's just one more time. In order to save $329 a month, you have to pay an extra $450,000. And look at the amortization schedule. Look at the first year, you only pay back $1,400 towards principal. It's not until the 22nd year that you even pay $5,100 towards principal. Remember, that's the first year in a 30-year mortgage. So 22 years to get to the same effect as the first year in a 30-year mortgage, plus 39 years. Look at this, 39 years for you to pay more principal than interest. You guys, this is a huge win for banks. When we look at this 15-year amortization and you realize you only pay back $233,000 in interest, which is still a lot, by the way, you start to realize why banks don't want people paying off loans. They want us to stay trapped in this debt. And when we look at the actual mortgage payments, take a look at this, guys. Currently, right now, according to Rocket Homes, it's saying for 2025, the average mortgage payment is $2,329. So hypothetically, if mortgage payments, which they wouldn't, but let's hypothetically say they go down $329 based on the math we just did, that would mean mortgage payments would go back to about 2023. So you get to pay $450,000 more, and you get the relief in mortgage payments going back to 2023? That's a year and a half ago? Mitch, I want to make it very super duper crystal clear to mom and pop on why doing this is such a bad idea. Can you please explain why the real victor here would be the banks and the loser would actually be mom and pop? And thank you for doing a video with me in the evening on Sunday.
The reality is that this is utter nonsense. And I'm going to go through the reasons why, but bottom line is this has a 95% chance of complete failure for the following reasons. One, your interest causes the outstanding value of the home to double over and above the 30-year versus the 50-year. The average age of a homeowner in Texas is 47 years of age. Even if you said that it was 30 years, do you realize a 50-year mortgage, the probability of that person ever being able to pay off that house is literally less than 5%. The third issue is it will lead to higher prices because the sellers will try to capitalize on what they appear and what they think is greater affordability. It doesn't meet the standards for consumer protection policy whatsoever. There's no protection here for a consumer. This is garbage. It doubles the cost of the house. It'll lead to more foreclosures. And it is the exact same issue as what happened in 2008, where you can get in with no money and get a 50-year mortgage, but there's no equity. There will be no equity when you decide to sell. Think of it this way. A 30-year mortgage, you decide to sell in 10 years, at least you've got some built up equity. 50-year mortgage, you've got zero built up equity when you decide to sell in 10 or 15 years. You're going to be upside down. The owners are going to be trapped in debt for a longer period of time. The risk in the marketplace will end up increasing the interest rates. They will not go down, they will go up. And then in terms of the banks thinking that they've got a home run on a 50-year mortgage, they're delusional if anybody thinks this. Why? Because you've got a decreasing asset. The older it gets, the less the value, not the more the value. The banks are going to be held out with no protection either. This is as dumb can be. This is a 95% chance of failure. This will not work, period.
Yeah, and this is nothing new, you guys. Back during the global financial crisis, and they did away with this through the Dodd-Frank Wall Street Reform and Consumer Protection Act, they had something called 40-year mortgages plus IO mortgages, which is interest only. And honestly, guys, a 50-year mortgage, although it has the illusion, and I guess it does pay a little bit of principal, it's an interest only loan. And the only person that's going to win and really make money off of that are the banks. You're literally only going to be paying back interest and not the principal. It's forever debt. You're going to stay stuck in it. Do not be fooled by the media. Now, here's a really good article that's going to go into some other points about this 50-year mortgage. Is Donald Trump proposing a 50-year mortgage? What to know about long-term loans? Now, I only highlighted a few things here because only a few things really matter, you guys. But there are some Trump allies that are balking at this idea, like conservative rep Marjorie Taylor Greene. We love you, Marjorie Taylor Greene. We love what you're saying. On X, she's saying that she opposes this move, arguing that it rewards the banks, yes, mortgage lenders and home builders, while people pay far more interest over time and die before they even pay off their home. Yes, correct. Appreciate that. While the idea of extending mortgage terms may initially seem appealing, it has a few serious drawbacks. Perhaps the most daunting is that legislation passed after the 2008 financial crisis explicitly limits most regulated mortgages to a term of 30-year maximum. They can just revise the law. That law used to have debt-to-income ratio. Really, the whole premise of Dodd-Frank was debt-to-income ratio. They wanted to do away with stated income. But you guys probably remember a few years ago, they removed debt-to-income ratio because they found these lenders were violating Dodd-Frank. So the same thing can happen when it comes to term. Dodd-Frank isn't real because they're not enforcing it. And whenever they get popped by violating it, when enough lenders get popped, they just change the law. That's what history has shown. Interest rates, like Mitch said, will go up on longer term loans. This article is pointing out that longer term loans build much less equity. And this is some pretty crazy stats. When homeowners make monthly mortgage payments, a portion of that payment goes to cover interest costs, and a portion goes to equity, the owner's stake in the property. The longer the term of the loan, the less equity that you get. And I showed you guys that in the amortization schedule. Underwater homeowners are 150 to 200% more likely to default on their mortgage than those with positive equity. And that was from a 2016 academic paper from Colorado State University. Mitch, what do you think is really going on here? Do you think that they're extending the term because they anticipate prices going up because they plan on doing a $10 trillion bailout, hypothetically? Or maybe interest rates are going to go up because they can't control the longer end of the yield, so they're preparing a longer term amortization? They're trying to short the market. What on earth, Mitch, is going on right now?
The reality is that the interest, the outstanding interest on the fraudulent principal, be it in the bonds or be it in the underlying assets, has outstripped the ability of anybody to pay for it. The money doesn't exist. So what could be the underlying of this floating of this balloon? Well, the theory being, if you could take a 30-year treasury and turn it into a 50-year treasury, you could push the can down the road. It won't work for the same reason that it won't work on the houses. Over and above that, what's really causing this, if you break it down, which is what we've been jumping up and down about for the last 11 months, is the fraudulent overvaluation and overtaxation as a direct result of the fraud created by the school districts, of which push the central appraisal districts to commit overvaluation, bond fraud, and accounting fraud. That's what's going on here, except on the federal side, as we've also said, the Federal Reserve is the world's largest purveyor of fraud. When you print money, you create inflation. We have two sets of inflation, two different sides of the government, be it state and federal, doing the exact same thing. The money does not exist to pay for the outstanding compound cumulative interest on the fraud that has been created both at the state and the federal level. So instead of fessing up and admitting we've got a problem and we've got to get the fraud out of the system, they're doubling down on stupid. These solutions will not work. Not now, not ever.
Mitch, they may be quadrupling down because that's not all we're going to cover today. Don't forget that earlier this morning, this is what President Donald Trump said. People that are against tariffs are fools. We are now the richest, when did we stop being the richest, most respected country in the world with almost, it hurts me to say this next part, this is not me saying this, with almost no inflation and a record stock market price. 401ks are the highest ever. We are taking in trillions of dollars and will soon begin paying down our enormous debt. I like that, the 37 trillion. Record investments in the US, plants and factories going up all over the place, and a dividend of at least $2,000 a person, not including high-income people, will be paid to everyone. That was this morning, you guys, and raise your hand if you want that, but raise your hand if you also know that will destroy the economy. Don't forget, we have other problems going on right now, i.e. the government's still literally locked down right now. It's still shut down. Absolutely shocking. Nearly 42 million Americans lose their food stamp benefits. Don't forget that, you guys, and Thanksgiving is right around the corner. Unless Congress acts before the end of the year 2025, 15 million Americans will lose their health care, and 24 million Americans who rely on the ACA or Affordable Care Act could see their health insurance go up by 75%. We are hurting in America, and allowing Americans to get into more and more and more forever debt is just not a solution that we should be talking about right now. We should let the banks fail and we should allow the economy to deflate. Mitch, I like the top line coming down. That's important. And to his credit, that actually did start happening the second half of the fiscal year. But Mitch, what do you think that America needs right now? What the things that I just mentioned, what do we need? Do we need that $2,000 stimulus? Do we need SNAP benefits so Americans aren't going hungry? Is that even going to Americans? Do we need the ACA extended? What does America need right now? Because I'm saying what we need right now is deflation. What do you say that Americans need right now?
Across the United States, given all the data that we've got on my website and on Jeff Mashburn's site with regard to Texas and Travis's site, I believe the answer to the question is repeal all property tax in favor of the uniform states, as in multiple states, sales tax. The reason why I started going down that path is because it is the only solution. All this other stuff that people are floating out there, and I don't know that this is President Trump floating all this stuff. I have no idea. Could be the press for all I know. But I've spent my career studying thousands of business models, and I even went through one of those earlier today with Travis. The business models are the business models, including trading, including a grocery store, all sorts of models. But when you create inflation, you knock these models on their end. You cause problems. Mom and pop has a household to run. You cause problems when you create inflation. The fastest way to fix this, as I've been saying, it's good to have these tariffs because they are making a difference. That's the top line revenue over here. The bottom side revenue, which is just as important, if not more important, because it touches the lives of every single American without exception, is to get rid of that real estate tax. Because not only does it protect the property owners and put the balance sheet where they own that house at the end of 30 years back in their hands, it also stops the cascade of expenses in terms of inflation. Because, as an example, if you get a cappuccino, there's 7 elements of real estate in that cup of cappuccino in the morning. When you get rid of the real estate tax, all those elements of real estate, every level of it goes away. That causes deflation. That's the fastest way to fix this. Now, with regard to the Federal Reserve, well, the truth of the matter is, I've also said this, The Federal Reserve doesn't have a reason to exist. Its sole purpose in life is to backstop the banks. We wouldn't be having this conversation if the Federal Reserve didn't exist. We wouldn't be having this conversation if the school districts, as denoted by the states that have somewhat of autonomy that hide behind sovereign immunity, didn't exist in their current format. They should not be allowed to have access to the bond markets, period. I've said this, we've proven it. We've handed this off to the SEC. We've got more stuff coming down the pipe. Travis just saw that about an hour ago. It's pretty damning. And we're going to be hitting that against all the authorities that are out there across the United States having to do with the Supreme Courts across the United States. It's coming. Bottom line is the two largest purveyors of fraud on the planet are what are causing these gyrations. And I fully understand President Trump wanting to be a cheerleader. I get it. But you don't go out in this time when people may not be able to go home due to lack of flights for Thanksgiving. You don't go out at this time when people, even though, yeah, fraud has occurred on SNAP, there's no doubt, but you cannot create a situation where millions of people aren't going to have access to food stamps through the SNAP program. Can't do that. You got flights. You've got inflation in the system. There's lots of problems. To me, it seems best not to talk and best not to have the minions talk until you've got real solutions. Poking at the air isn't going to get anywhere.
Well, they're poking at the air and they're talking about fake solutions. So talking about those fake solutions, Mitch, do you really think, well, both, right? Do you think, number one, they will actually go through with the 50-year mortgage? And number two, they will actually start stimulus payments again?
Number one, no, it'll never work. The stimulus payments, part of the problem here is the Obamacare, and it was never real. It was a lie. And now it's ramped up. It's got the same problem. But the compound interest that's outstanding for the debts that have been created is what is gyrating this and causing the insurance companies to say, well, wait a minute, we have to get paid. None of this was real. And so the idea of creating a stimulus to offset the Affordable Care Act, that may actually happen. Now, is it right? No, absolutely not. Destroy it. Absolutely destroy the system. Put a new system in place where everybody's got that type of coverage, but it's within control of the U.S. borders, including the production of medicine, et cetera, et cetera. I don't know what they're doing. I just know that mathematically, based on the business model, the ACA doesn't work. Now, if they say, well, we're going to print, and I saw that report myself. It said that at $2,000, but it didn't say how it was going to come back to the American people. So honestly, if it's a check to cover off the ACA, it doesn't put any money in anybody's pocket. It's just transferring money from the government left hand to the government right hand back to the ACA. So I don't even think that's going to work. Will they do it? Yeah, they might.
That's interesting. I actually thought the opposite, to be honest with you. I thought it was more likely that they would do a longer term loan because it benefits banks so much. It's so much to go from 30 years to 50 years. It's such an incredible benefit from the banks, while at the same time, you don't need to lower prices. Payments will automatically go down $300. So it's a temporary fix. I think, sadly, Mitch, and a lot of people that are watching us don't feel this way, but sadly, most Americans think that payment's more important than price. And because of those things, because of the propaganda, because of history, I think Americans are going to get bamboozled once again. And through the education and hopefully through the videos that we're making here and through all of the stuff we're showing you guys, we're going to demonstrate to you that you don't have to be a victim and that you should always remain hopeful. You should always continue to learn, and you should always try to help good people in your community. And also know this, you guys, we love you and we can't do this without you. Please help support us by sharing this video, commenting below, liking the video. And other than that, guys, thank you for joining us this Sunday evening. I hope you guys have a great week here coming up. And if you're out there investing in real estate, the economy, your life, whatever it is, you guys already know, we wish you luck and we hope you win.